Here's a question that might make you uncomfortable. What if your biggest financial enemy isn't the market, inflation, or even taxes? What if it's the 3-pound organ sitting between your ears? Your brain evolved over millions of years to keep you alive on the African savanna. It's incredible at spotting predators and finding food. But when it comes to money, it's about as useful as a GPS from 1995. Think about it this way. Your ancestors who survived weren't the ones who thought long-term. They were the ones who grabbed the berries right in front of them, even if waiting might have meant a bigger harvest later. The patient ones, they starved. That's the invisible hand stealing your money, not Adam Smith's invisible hand of the market. The invisible hand of evolution, reaching into your wallet every single day. Let me tell you about Jesse Livermore, one of the greatest traders who ever lived. In 1929, he saw the stock market crash coming and made what would be about $100 million in today's money by betting against the market. He was a genius at reading market psychology. But here's the twist. This same man went bankrupt 4 different times. 4 times. The last time, in 1940, he took his own life in a hotel bathroom, leaving behind a note that read, "I am tired of fighting." How does someone who could read the market's mind so perfectly keep losing everything? The answer lies in something researchers call the hot-cold empathy gap. When Livermore was calm and analytical, he was brilliant. But when emotions ran high, when fear or greed took over, his ancient brain hijacked his modern intelligence. He couldn't predict his own behavior any better than he could predict the weather. This is why 88% of day traders lose money over time. Not because they lack intelligence, not because they don't understand charts or financial statements, because they're fighting a war against themselves, and they don't even know it. Your brain has 2 systems. Think of them as the driver and the passenger. The driver is your emotional brain. It's fast, automatic, and incredibly powerful. It sees red on your portfolio and screams, "Sell everything." It sees green and whispers, "Buy more, you're a genius." The passenger is your rational brain. It knows that markets go up and down. It understands compound interest and dollar cost averaging. But here's the problem. The passenger is never driving when it matters most. Research from UCLA shows that when people are stressed about money, activity in the prefrontal cortex, the brain's CEO, drops by up to 40%. It's like your smart brain goes offline right when you need it most. But some people figured out how to hack this system. Let me tell you about Hetty Green, the Witch of Wall Street, in the early 1900s. She was worth about $2.3 billion in today's dollars, making her one of the richest people in America. Green had a simple rule: never make a financial decision when she was emotional. If she felt excited about an investment, she would wait 24 hours. If she felt panicked about selling something, she would wait 24 hours. She called it letting the fever break. Her neighbors thought she was crazy. The newspapers mocked her. But while everyone else was getting rich quick and going broke quicker, Green was steadily building generational wealth. She understood that her emotions were not her friend when it came to money. Green also did something else brilliant. She treated money like water in a drought. Every dollar was precious because she had lived through financial panics before. While others spent freely during good times, she saved relentlessly. While others panicked during bad times, she bought everything on sale. This connects to what psychologists call loss aversion. We feel the pain of losing $100 about twice as intensely as we feel the pleasure of gaining $100. It's why people hold on to losing investments too long and sell winning investments too quickly. But here's the reframe. What if this isn't a bug in your system? What if it's a feature you can reprogram? Warren Buffett once said something that sounds simple, but cuts deep. Be fearful when others are greedy, and greedy when others are fearful. He's not giving you a market strategy. He's giving you a psychological strategy. When everyone around you is excited about an investment, your brain should start flashing warning lights. When everyone is panicking, your brain should start getting curious. You're not trying to time the market. You're trying to time human nature. Think of it like surfing. You can't control the waves, but you can learn to read them. Fear and greed create massive waves in the market. Most people get tumbled by these waves. But if you can stay calm on your board, you can ride them to shore. The wealthy don't have different brains. They have different systems. They automate their investments so they can't sabotage themselves. They set rules when they're calm that they follow when they're emotional. They treat their future self like their best friend, not their enemy. Here's the data that changed how I think about this. People who check their investments daily earn 2% less per year than those who check monthly. 2% might not sound like much, but over 30 years, that's the difference between having $100,000 and having $150,000. Your brain wants to check. It wants to tinker. It wants to feel in control. But control is often the enemy of wealth. The most successful investors I know have learned to work with their psychology, not against it. They know they'll feel fear when markets crash, so they set up automatic investments. They know they'll feel greed when everything is going up, so they stick to predetermined allocations. They've turned their biggest weakness into their biggest strength. Your brain isn't broken. It's just running software from the Stone Age in the information age. But once you understand this, you can start debugging your financial life. The invisible hand isn't stealing your money. It's showing you exactly where to look for it.